Alrighty, Doc here from North America. Good morning, good afternoon, and good evening somewhere on this planet. And we are starting off some. This is where the news, all right, let's put it this way, stats come out in 45 minutes. Definitely people are looking at that PCE. They're thinking that'll give them a hint on what's going on with inflation and growth and, just all the mechanics that everybody's concerned about. Hey, Robin, what markets are you trading? Let's see. That's a good question. Anybody out there listening, what markets are you trading? What are you interested in? I like that. That's a good one. Now I'm just trying to find my. Where's it at? Where's the skip? There's the skip. There it is. And you can see on the screen there's the dollar index on J4X. And you can see the dollar index on Chicago Quant's beta platform. You can see it's starting to dance through the sell side a little bit here today. You see a little red dot. Where's that mousey at? Come here, mousey. Come here, mousey. Right there. You can see right there. You see the little red mouse right there. You see it's starting to break down there. And at the same time, look at that. It's been in that weekly buy for a few weeks. You see that pressure there. You see same thing right here on J4X. You see that red developing from yesterday. It's there again today. You see the fast right there at 55, basically point 0. And you can see that the slow is at 61.9. So it's above it. So that means that the pressure is coming in on the dollar. And so the dollar is starting to move down a little bit. Nothing major as far as I'm concerned. We're going to bounce around like that. And obviously, we always say here, if it's over 100 or par, I like to call it par, just like when we were all for years going, when is the euro going to go down to 100, or 1.00, however you want to express it, basically that flat number. And it did, about a year and a half ago now, and basically got down into the 95s or 96s, something like that, for the euro against the dollar. And now we're looking at the dollar index itself, playing around with that area after that explosive move from the inflation thing all the way up to 114 and change about a year and a half ago now, almost the same time period. So basically, inflation drove the euro down more than anything else, and slower growth, that type of thing. And so that's where we are. We're seeing that this morning. And we have, everybody's looking for a hint. They need that hint of where the market is going and what it's going to do before it does. So it'll be fun. I imagine that PCE comes out in 27 minutes. And then they will release it to the public at in another 15 minutes past that. So basically, what are we talking about? 42 minutes, 41 minutes. So we'll see what kind of action we're starting to see on the stock indices, because that's where they translate it to, I guess you could say. And sometimes I guess you would see it on the currencies. You definitely would see it on the currencies. But we don't usually keep a short-term intraday chart, so you see it just bouncing around. But maybe we'll find an intraday chart for like the euro or something like that, just to see what kind of flavor, or we call it flavor on the trading floor, and in the hedge fund industry we call it a flavor. I see there's Janos talking about something. By the way, I will be in late today and very early tomorrow. Okay, sure, Janos. Excellent. All right. So there we are. You see that dollar thing going on. What's the news today that what is pushing the marketplace around today is the PCE, the price consumer, or PCI, is it? PCE or PCI? I think it's PCI, price consumer index. Let me just double check it. Either way, it's coming. As a matter of fact, let's go take a look at it on Dukascopy's calendar. Let's go check it out there. Let's open up the calendar right there. Oop, messed that up. Let's try that one more time. Online calendar, there it is. And what it's saying for today is Thursday. He'll spill out. And there's Thursday. And there it is, as I see, Chicago, low, high. Now they've gross domestic product. Oh, that's another thing, too. 15 minutes later, we do the gross domestic product. And so I thought it was today. Is it tomorrow, the PCE? Let's see. Personal income. Yeah, tomorrow's PCE. Core personal consumption. Now they have it listed as medium. And core personal consumption is medium. But people are really staring at it. I mean, it's become, for the last week and a half, they've really gotten aggressive about the idea. So they're all staring at that. And let's see if I can find the. It's supposed to come out at 15. So let's see, 8:15 Eastern Standard Time. I don't see it there. So maybe today. I thought it was today with the gross domestic product. I don't see it on there at all. Core? That's odd. I'm confused because something's coming on. The core is supposed to coming on at 8:15 today. Instead, it's showing it as a. They're showing durable good orders. That's a 10. Huh. All right. Well, we'll see at 8:15. But I was told it was 8:15. So we'll watch the action. I keep on hearing 8:15. All right. So we got the, basically the core personal consumption, and that'll come out at 8:15, and then we have gross domestic product coming out 15 minutes later. GDP. Well, wait a minute. No, that's There it is, right there. Okay, so it's tomorrow core. I'm confused. Why are they saying today? All right. Anyway, it doesn't matter. We got news coming out today. That's for sure, and that's the GDP, and that should have some. Let's put it this way: it should have some interesting effect on the marketplace. I was thinking about actually buying a couple of spreads against it, but we'll see. We'll see how they lead. If we see them leading in 23 minutes, they start to lead and start shaking the market a little bit on the stock market, and it's going down, then I'm going to be buying the put side of it. And if they're starting to push it up a little bit, then I'm going to be buying the call side of it. So that's the trick of the game there. All right, so from there, I'm done with the calendar. I've had enough fun with that. There it is. And so, there's Janos. Yo, Janos, this is in Skype, and hi. Had to take off, Mom. Okay. Mom's hearing in right ear. Had to accompany her to the doctors, and you're a loving son. That's so nice. God bless you. And she stayed over at my place the 2 days. Good. That's nice. GDP today, right? Now, it was a core is tomorrow, but there's something coming out today because CNBC and Fox Business is saying something's at 8:15 today too. So it's one of those stats that people don't usually pay attention to, that the hedge fund's been talking about all week long, and the market's been talking about. They're paying attention to it very deeply. So we'll see. So if the markets start to go wild at 8:15 Eastern Standard Time, 7:15 Robin time, and was it 2:15 or was it 1:15 Janos time in the afternoon? Then you'll know why, because the hedge fund guys are staring at that, and gals, hedge fund guys and gals. All right, so where are we at here? We've got the dollar index up there. What else can we say about that? It's just straddling the 102 to 103. You can see that right there. It seems to be hanging right on the edge of that. And what else can we say about the dollar index? Let's put it up on the platform itself. Now the stock market is starting. The S&P 500 is pushing into the highs of the day. Okay, and so that's kind of interesting. And that's what they're doing. Let me just show you that right there. So they're doing a little push there, but it doesn't come out until another 35 minutes, and then at the same time they usually sneak those things. So I'm confused. So we got stuff on and we'll be able to hear it, and maybe they were wrong and they had the wrong day, but we know one thing: GDP is coming out at 8:30 in 50 minutes, so that'll be fun. All right, and that comes out basically quarter after, right towards the end of the webinar, right around that area. All right, so let's go over to that's it right there, and you can see. Let's just make that. It's this one right here. This is the high of the day on the S&P 500, right there, right there. That's what that is. That's from yesterday all the way to today. This is an intraday chart, and then this is a shorter intraday chart, the 936 compared to the 16,000. And we can tighten that up a little bit more, and you'll see the same thing where that's midnight right there. That's midnight right there. So it goes up there, falls back down. The London, the European Open, basically. European and London Opens are right here. And it runs up there again and fails. Runs up there. Isn't that the three top thing? And so if they break out of that, they go zoom to the moon, Alice type of thing. Does that make sense to you? Robin? You see that? Those three peaks? And maybe they go build the dome on the top. Remember that pattern? 3 peaks in a dome? And they'll shake them up again like they did yesterday. Look at it. Ran them all the way up to the 930 area right there on the S&P. 4,930-ish. I think it was like 33 or 34. I lucked out and got a little short right around there, so that was good. Indeed. And then I ended up covering down in this area here. Not that one. Yeah, I guess it was right there, off of this one right there, around the 05. I think I got covered at 08. Anyhow, that is the action we see. And let's see. No. It's like 3 peaks in a dome. Look at that. And the dome hasn't come yet. All right. So now from there, let's go back to the dollar. Let's see what Mr. and Mrs. Dollar are doing here and all the little dollars. And right there. There's the dollar index. And this is the daily, and you can see it's still in the buy today. It's still in that buy. It tried to push it yesterday. Something's a little funky about that. Let's see if we can fix that. I swear, sometimes this system is. That's why we're building the beta. Is because our main platform is so sophisticated. We have to actually change the data feed at times. See how it changed that day right there? We had to go to default, and then somewhere in the middle of the trading, as soon as the U.S. market opens up, like the Europe market and London market open, then it goes to another level. It wants to go to the 24/7 to function better. It's crazy. And so you can see here, we are threatening the daily sell right there. You can see that. We got a red dot, and we have it cutting underneath the line. And so it tells us how inaccurate it is. I don't have to guess at it anymore. Because it doesn't show you, the other one on default didn't show this big, bar. It didn't show that at all. It had it like, some type of little piece there. So this is went into the dollar. The dollar went into the buy last week, and it still seems pretty fine. It's above the manifold. And I guess as the dollar rises, what it's telling us is that interest rates are not going down here. And they seem to be getting used to the idea. I keep on hearing the hedge fund people going, but we know it's going to be, they're going to drop the rates. We know it. I heard 2 money managers this morning actually suggest, they said, it went from 0 to 5%. And so, we don't expect it to go to 0 again, but maybe it'll go to 1.5. And I'm thinking to myself, this is the Fed funds rate. They're actually thinking Fed funds is going to go down to 1.5 with an inflation rate at 4%. Honestly. And so I am, how Janos says, and did those videos about the fundamentals just don't work the way they used to, and it's so true, it is so true. And then one of the money managers actually said, I don't think it's going to go to minus again. Could, but I don't think so. And I'm thinking to myself, these people walk and chew gum and drive cars. Oh my God, they're so dangerous. Not counting the fact that they're managing billions of dollars at the same time. I just want to shake my head. They actually think that minus is a norm. I'm like, are you out of your mind? Minus is not a norm. It's just political hocus pocus. That's all it is. Nothing more than that. It's a bunch of politicians spending more money than they take in, and that's why we have a $34 trillion deficit. And it's because they actually have that mindset, and it's like, oh, you gotta be killing me. Minus is a norm. No, minus is not a norm. Minus was never a norm. Minus is abuse by political people. That's all it is. Okay, as I just had a sip of my coffee there, I just had to get that off my chest because it drives me bloody crazy. Just bloody crazy. All right. So from there, we jump over to, where are we jumping over to? Oh, yes, we'll go to the euro. Let's take a currency. Unless someone out there is paying attention and actually wants to ask me about something or, wants to tell me about something or, any of that stuff. But, just amazing. I'm not going to repeat myself, but I'm just like, can't even use the words. Let's just go take a look at the euro. Let's not get too deep into the bushes here. And so there's the euro this morning on our main platform. Let's put it up on J4X. Righto thero. And there it is right there. There is the euro right there. You see it's kind of perking its head up. Now, yesterday over here, you can see that that's right. You can see it went into a sell, and now it's trying to climb back into a buy. And you can see it's unchanged from yesterday right there. But it's trying to climb up in there. And then we're also at the same time watching this weekly thing. We went on from here. We were in the weekly buy from here, basically. And now we went into the weekly sell right there. And I guess the reality, and when you're talking about money managers nowadays, reality is not always as close as you would think. Okay? The understanding of the market and the I guess you want to call it the mechanisms that make things go up and down, they're not exactly that in tune to it. That's why they're always guessing, and that's why they underperform the market year over year. You don't see these guys, outperforming markets. They're underperforming markets, and they're saying next year we'll do better. And so in this case here, the market is interpreting that they're going to cut rates. And some of these people actually believe that they're going to start cutting rates at the end of February going into March. They're pricing the Fed funds futures to that fact. But the reason why we have seen the euro top out here is because it's not happening. And it only rose because they were interpreting that it was going to be cut. And now that it's not being cut, you're seeing our algorithms, our conscious algorithms. So it's even worse when it comes to trying to explain our mathematics. It's kind of it is basically, it looks like a consciousness. For 45 years it shows me it's a consciousness on some level, and I can't even get into that concept. Understanding what the concept of consciousness itself is a very deep process. I don't understand exactly what's going on. How does a spark think? That's basically what it comes down to. How does a spark think? So we look at the physical. We're looking at the physical here. We're seeing the price action. And that's what we're telling you here is, and we're saying, and we're extrapolating and trying to express that it's somehow or another the sparks have told it to go down. And you can see we got a red line right at the top of it. And you can see that let's see, in this case here, I think we've made the fast on this particular one yellow, like a warning, like a traffic light. There's a yellow. And so you can see here it tops out and it tries to, it's breaking down. So it's going into the weekly back in here. And then the slow has joined in last week here. That's the green and the yellow. And then the fast moving weekly algorithm has started to break down, broke the manifold there, and started to break down in here. And you can see that action there. And so, this is just the mathematics of it all. Trying to comprehend, and it's not a average it's based off of. It's based off of a conscious formula that I developed to try to do atomic theory back about 45 years ago. Okay? And it just happened to seem to work in the markets when I went to the exchange. It's just like, oh, that's odd. It seems to want to work with it more than it does with particles. So anyway, that's where we are, and that's what it's trying to tell us. Now, I've probably lost viewers at this point. Yeah, I see one has disappeared. So they're probably at this point going, they're waving their hand and going, he's crazy. And they're walking away from the screen at this point, on to another screen. They're looking at something else. But those that have stayed here, that's the only way I can describe it. Yeah, I know it sounds crazy. I agree. Because I don't know how to describe it any better way. And that's what we're looking at. And that's what it's trying to tell us. This algorithmic consciousness math does that. It's the weirdest thing. And so we go back to the money managers and what everybody's anticipating right now, and is that they actually know, and I agree, and they're not wrong. They know that rates are going to come down. The problem is that they thought they were going to come down at the end of February going into March. They're not. And that's why you're seeing the euro top out right there. You see the euro topping out right there because now they're starting to understand the same reality as you and I as we speak about it because of you and I watching our mathematics every day on these webinars. And so, and obviously we can't fudge it because you can just go back and look at YouTube and see if I was saying the same things and pointing out the same things then. More than likely, yes. How about that? The 6 who are here are still here. That's pretty good. I've made you all feel like it's a crazy experience going on. Well, it is a crazy experience, but that's besides the point. All right, let's go from the euro. Let's jump over to the cable. And let's do this, too. At the same time, we'll move J4X over there. And you can see, and there's J4X. You can see the 2 green lines. You know, they're trying to lift, like this is trying to lift for the last couple of days. But, you know, in this case here, we got the green and the red, so it didn't justify it there. And it was still minus. And so then today, we are above that line there, that 0 line. That's the go, no-go line, basically. And I do like to use a little Gauss, you know. Or was it Euler? No, Euler. It was Euler, the mathematician Euler in the 17th century, who actually published papers 26 years after he was dead. He did so much mathematics that Euler, and Euler's the one that had figured out how you would land a spaceship on Earth, you know, coming from, you know, outer space. And that's the go, no-go. And you hear that in military terms and flying terms and space terms. And that's what that is. That's the go, no-go. We lost one more. I probably did it too. We started going into Euler, a blind mathematician from the 18th, I guess the 16th and 17th century in the 17-somethings. And he died. And he was still publishing papers. 26 years later, he wrote so many papers on mathematics. And that's why we have that 0 line, which is the go, no-go. Exactly. All right. Now, from there, we jump over to the cable. How about that? Let's see if we go to 4 from 5. That person just walked away going, this guy is nuts. All right, let's go find the cable. And that's the dollar cable right there. Now, dollar cable's been acting very strong, as you can see. It's the good visual there with the J4X. You can see lots of green, green, green. And let's put it up over ya. Over ya. So yar. We use a sailing term. Sailing from space to the surface of the earth. Yar. Let's see, there's the cable right there. And you see it's had that aggressively moving uppish type of action. And it did slide into a sell 2 days ago and jumped right back into the buy. Let's steal this buy right there. You can see the line through the go, no-go, or the 0 line. And we'll grab that and put it right there. That's usually I try to do that so you can see it a little bit visually better. Or I'd have to go like this. I say binga, 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 and make it bigger and wider, and then it starts to lose its distortion. It looks kind of crazy. So it's better to tighten it up a little bit and not, whoop, wrong one. Let's try that again now. There you go. That looks a little bit better. So there you go. 2 days in a buy. You know, but it's pretty much unchanged, maybe a little bit firmer than yesterday. I mean, yesterday's settlement was, what was the settlement yesterday? 127.25. So 127.55. And today it's 127.245. So just a tick underneath or two, just a little weak, and that's why you see it right here on J4X right there. You see it's just a little minus. Oh, didn't mean to do that. See it right there? Oh, now it's plus. It's that close. Whoa, we jumped to 8. Maybe they ran out and told their friends, you got to hear this guy. He's talking about Euler, and he's talking about flying saucers. Oh, my God. The markets are... we just lost 2. They saw that I saw them. Ooh. Okay, so there we are right there. That's the... see, what time is it? It is 5:06. Okay, so in 4 minutes, if I'm right, what they were saying, the numbers are going to be coming out at 8:15 Eastern Standard. And if I'm wrong, I don't see it on any calendar, so it doesn't really matter. But there's obviously what was normally considered a minus information statistic is coming out at 8:15 this morning. We'll see if it has any effect. Then you'll be like, wow, this guy's he's really paying attention to the market. He's not just crazy, but he's really crazy. All right. So from there, that is the cable. Cable's been firm. It's not like the euro, challenging its weekly. I mean, it's down there. It's dropped underneath the manifold there. Let's see if we can widen this just a little bit, not too much to make it look distorted. There we go. And so you can see here, it's dropped underneath this, what we call this our nonlinear time manifold. I invented it. That's why I put the name on there. I created that. So it's basically what it is. It's a standard deviation being incorporated into our mathematics. Okay. So in other words, you see John Bollinger's bands, that type of thing. But this is my way of taking the standard deviation and commingling it with my mathematical algorithm thing, my widget, my algorithm widget. There we are. The consciousness. And so you can see here, it's just underneath. It's showing the pressure on it at the moment. But it's still above. And you can see the fast algo, bounces off the go, no-go line, and then, bounces it again. Now it's breaking it a little bit and trying to climb back into it again as we speak. On the euro, we have it as a yellow, like a warning light. And, in many ways, if the manifold itself, these two mirror image lines weren't yellow, I'd make this yellow. And I might realign those whole things because I think that would be, even more interesting, like a warning. Warning, Will Robinson. Warning. Robbie the Robot. And then from the cable, obviously the cable's being, stronger than the euro at the moment. And so we go from the cable we go to the Swiss, which, here I was beating my chest talking about how strong the Swiss has been for months. And now the central bank has changed the pattern. And so you can see right there, we got a couple reds, which makes it stronger against the dollar. No doubt about that. And you can see the fast is at 45.4 right there in the blue. And the slow is at 64. That's pretty far. That's pretty fast. That's a 33% drop. And it's moving down. There's some pressure. So that means the Swiss is gaining against the dollar. And I guess some of those players are like, no, we're not real happy about that. In other words, central bank keeps, and that's what they're doing there today. You can see it. They slam it yesterday, and then today, boom, they try to turn it up. But our math is telling us, don't worry, be happy. Unfortunately, on the weekly side of this whole thing, you can see here it's threatening to go back into the buy, and we're not. Whoa, let's see, where's that go no go zero line? Let's move that right to there. There it is. No, that's not it. Like that. Oh, I know what it is. We have to move this up. That's what it is. Like that. There we are. So you can see here it's been above the zero line or go, no-go line right there since the start of the week. And also that article came out on Sunday or Saturday or something like that. It came out and gave us a good insight to what the Federal Bank of Switzerland is doing. They're trying to push back against the inflation. It's starting to creep into their economy, and they're not happy about that. And I don't blame them. And so, because it's currency translation that's generating that. It's kind of like when you're a country and your currency is not in good shape and you fix it against the dollar, and so when inflation is really roaring, your currency starts to gain strength, and that's not good because that means that that is good. You want to be able to buy items cheaper, not weaker. And so in other words, when inflation is going and you're using a currency that's gobbling up the inflation, it goes roaring up, like the dollar index went up to 114 because of the explosion of the inflation from Mr. Biden. And so it's policy that does that stuff. And in other words, more supply means more items at a lower cost. Less supply means that they're going to be at a higher cost because more people, the same amount of people want them, and there's less supply. And the Federal Reserve in the United States does a Keynesian thing, and they slow the economy, hoping that the inventory drops to a point where people start to starve, I guess you could say, in some aspect, and then they don't have the money to buy anything, and then the inflation slowly dies down. Whereas on the supply side, we think, well, you know what? If you don't have enough of them, manufacture more. And then when you manufacture more, then the price comes down. I know that doesn't seem to be logical to Keynesian type economists. They have a much more dire, like, go burn the crop. Burn it? Why am I burning it? Well, this way there won't be any food, and then they won't be able to spend money. Oh, okay. How about if they won't be able to live if there's no more food? They kind of lose that perspective of it. All right, so that... Okay, let's see now. If there's a number coming out at 8:15, let's see what they just did to the stock market. Oh, it looks like it's making a dip. See that? So the stock market is starting to make a dip right there. That is it, isn't it? And all right. Let's go over to this one. Matter of fact, we're going to go find this one. This is like Superfly. Right there. Okay, so let's put the line in at where it came out to the public, I guess. So 650 right there. Okay, so right there, that's when the news was released. If it's been released, and it's really coming out at 8:15 in 14 minutes or 13 minutes, there 12 minutes now. That's when it was released. So somewhere's around 15 minutes ago. I doubt they did it in a half hour. But right there, they started to perk it up. So if this thing starts to perk up from there and get going, it means that the number was conducive to action in the plus side. As it is now, somebody knew about it even further. Maybe it's not that big a number normally, so some people got the information even 15 minutes earlier. So we'll see. It put pressure onto the market. Not a lot, but the S&P dropped 5 points, and now the official number supposedly has come out, and the reporters are supposed to know it. And so now let's see if it's popping back up. We're going to see how that goes. GDP today. Yeah, no, I'm not talking about GDP. GDP will be in 15 minutes. It'll be released to the... there's another number coming out at 8:15, they're telling me. I've been hearing it for days now. So we'll see in 11 minutes what that number is. That'll be actually announced, whatever it is. And you look on the financial calendar, it's not even on there. Like tomorrow, it's not at 8:15. There's nothing today at 8:15. So I'm not sure, and I posted it even on Monday because they've been yakking about it since like last Friday. So there's money managers out there saying we're watching for this. So we'll see what that is. We've moved down to 5, so obviously we're scaring the straits. All right, so we'll come back to that. Let's jump over to, let's see, where were we at? We were looking at, what are we looking at? We were looking at the Swiss right there. Let's see, Blackstone rises on earnings. Not there. All right, so let's go over to the yen. And there's the yen. Traders, I don't have to go through this rhythm. you're welcome to ask about anything. You know, want to see gold right now? You want to see oil earlier? You want to see Apple Computer, Amazon, whatever? Just ask for it. I just go through a rhythm just so that I have a direction. That's all it comes down to. And so there is the yen right there. And you can see the yen is in a sell for a couple days. And what else can we say about any of that? You can see the weekly jumped into the weekly. Not the happiest thing for the LDP in Japan, in Tokyo. But that is what it is. All right, it seems like it's kind of stalled for the moment. This leg that started from here. Let's get that mouse going again. From here, that leg right there seems to be stalled for the moment, and that's probably because we're looking at the GDP and this consumer price thing. Now let's put it up on J4X. Right, not there. Right there, there it is. You can see a little red pressing down. The fast is at, what is the fast at? 62.8. The slow is at 64. So that's why it's in the red. These two are right here, and the pressure is on it. You know, in other words, they're trying to press it down just a little bit. I don't see that much pressure. To me, you know, when you look at this action right here, it's just saying that they've decided to stop, you know, they've stopped, the money managers and the central banks have stopped moving their position around for a little bit until they get more confirmation from the numbers. That's what it comes down to. The fundamentals that seem to want to work and not work and then want to work again, and then it goes back and forth, and it's like, what in the blazes? That's why I wish Giannis would put his videos back up again. He pulled them down. I liked those two videos that he put out on that about 4 or 5 years ago. Let me see now. From there, what else we got going? Okay, so that's the yen. And I don't need to go into... I haven't seen any LDP stories of the last 24 hours, so I'm just going to walk away from it at that point. LDP is the labor... Or was it the party? The Labor Democratic Party, LDP, in Tokyo. It's been running the place for a long time. Lots of different issues. All right, from there we go to the experiment. Talk about issues. Oh, what issues they have. Okay, what are we doing? We are at the moment, we are at all-time closing highs at the moment. Looks like a triangle too, doesn't it? Look at that little triangle developing there. And you can see the daily is coming from the zero line and moving up. Go, no go, and it's go up, not no go up. And you can see we're stuck in that weekly forever and ever and ever. I think it's like 19 weeks now. It's just show it to you for the fun of it. This is all fun. Fun and games. And so you can see there, it's been in that weekly buy since there, and it just seems to refuse to get out of it. It just keeps on clawing its way north. And on the daily basis, this is the center charts right there. This is, or the algorithm right there. That's the daily. And so daily's been in a sell for a couple of days as it bounces along the edges, and now it's trying to climb into the buy. It's got a little green dot. It's above the zero line right there. How much is it above it? Not much, but it's above it, and that's the way that goes. So it is 8:09. We've got 6 minutes if this imaginary number in Doc's head is going to spit out. All right, so from there, we go from the Turkish lira, we jump over to the South African rand. We start looking at the number one brick in the world, and there it is right there. And you can see it's been pressured somewhat down. I wouldn't call it. It's gaining. You know, it's pressuring the dollar. So in other words, when this thing's going down, it's gaining against the dollar. When it was going up like this, it was gaining against the dollar. When it's gaining against the dollar, is that right? No, I'm sorry. When it's losing, when it's going up and losing against the dollar, it puts pressure on the gold. So we go and we put that up on J4X right there. Right there. You see the little red there and the pressure, and you see it's at 28.7 versus 50, almost a 50% discount. It's like 47% discount. Yowzer. They're really pressing on that thing. And we go over to, we go to the gold. right there. We'll take a look at gold first. And you can see that's dollar index right there. And there is the gold. You see what they did to it yesterday? It was a smack-a-doodle down. Smack-a-doodle dandy. And you can see here it's a second week in the sell. It's been in a daily sell for a while here now, since the 2070 area, something like that. And we are now at 2015. Not a lot of big movement. Matter of fact, that's kind of the impressive thing about it all. Of late, the metals are not that jittery, playing with a 3 or 4 or 5% range, which is kind of nice for like the last 2 months. That's not bad. Remember, well, you don't have to remember, but gold and silver and crude oil and North Sea oil, they have a whole different volatility than the stocks and the bonds and all like that. They are definitely a much smoother, they're much more volatile volatility, because they have the ability to go 15%, 10% in like a week with no problem at all. That's not that far-fetched for 2 weeks to pass and the gold will be 10% higher, or 7% lower, or something like that. That is not that far-fetched. Those products have that ability, and that's always good to remember when you're a trader or a position trader of them. That you want to be married to like binary options, or options, naked options itself, so that you're at least hedging your delta, your gold or your silver, or, the product underlining. So, all right, and we're always glad to have a conversation about options. If anybody wants to have an options conversation, because we do like talking about options, we do. And so, in 3 minutes, the reporters will know what the GDP number is, and we'll go take a look at. Matter of fact, let's just take a quick look right now. See the stocks. This is when we think that imaginary number that's in my head that's coming out in another 2 minutes or so is coming. So they're leaning into the upside. Now we'll see in basically 2 minutes if that number comes out today or it comes out tomorrow. But they're, the hedge fund managers were mumbling this for even this morning. They were saying it. So we'll keep an eye out on that. At the same time, in another 2 minutes, the reporters, or now it's 1 minute and change, the reporters will be getting the GDP number. And you know that loose lips sink ships, and you know that they share this data on some level. So, oh, look at that. It's really starting to try to perk. We'll see. We shall see. So from there, we go over to silver, because we're watching, how the South African rand and silver's been doing something contrary. As you can see here, it's been moving up the last 2 days, whereas gold's been going down for 2 days. Now, we've had conversations about the silver gold pairs trade, and it's been underwater. It's pretty wide at the moment, and maybe it's adjusting. Maybe there's reason for it to start tightening up again and get up into the historical range, like the 26 or something like that. Or, not 26, the price tag of it, maybe for silver to get up to the 25s or something like that, with gold basically sitting still. Because they have been, matter of fact, Robin, do you follow the gold-silver ratio? And I noted it's very wide at the moment, very, very wide. Because you're looking at gold at only like $150 off of the all-time highs, which is somewhere around 4%, right? And then you're looking at the all-time highs of silver at $51, and it's trading at $22. So it is something like 67%. It's like 67% off the all-time highs. So that ratio is pretty extreme at the moment. Yeah. I mean, that's a pretty extreme ratio at this point compared to what it has been. I know it got historical. They were saying that. There was definitely historical action going on it. So let's see. What else we got going on there? So you can see this is going in the opposite direction. And you know what else is going on in the opposite direction? The cable. The cable's going on the opposite direction too, which is Very curious. Let's save that like that. There we are. And I want to just do the gold again, like so. And then we're going to put up, not the cable, what am I saying? The copper. The copper is going wonka also. So let's take a look at copper. It's roaring up because of the stimulation that's going on in China now. And there it is today, not higher up, but it's been in a daily buy from there. And you can see the fast is breaking through here. And it's trying, oh, here you go. Here's some data that's just popped out. Deposit rates. All these things have popped out. This is all euro numbers. Interesting. So let's go over to the stock market now, because the 15 number that I was talking about is already out the door. Yeah, look at that. Let's see if they tell. Here it is. Hold on. Oh, European and central banks left them. That's what they just had up on there. Leave the rates unchanged. And look at the way that's really put a push into the market there. Since this white line, since 15 minutes ago when they knew, it's been finding a way to climb, not go down. We show this to you when we get time all the time here. Time, all the time. Time, all the time. Okay, so that's the ECB leaves the rates unchanged. Maybe that's what they were watching, the money managers, was the ECB. Just to see, to confirm that nothing was changing. They're keeping it, as they would say, they're keeping it hawkish. All right, now at the same time, the GDP number has come out right here. Right there is the let's do this too, like the same time. Wait and extend it all the way up. This is where our GDP number just came out at the same time. So they're saying it's keeping the rate cuts down at the moment. So that was the 15-minute, the 8:15 number that they were talking about. And so tomorrow, the CPE, or Consumer Price CPI, comes out. And they're really staring at that one too at the same time. So there it is. You can see the insider is new because it was just drifting up, up, and up. And then when it finally does come out, boom. It's the classic. The classic. Front running the market, and it's A-OK with the Futures Trading Commission, and it's OK with the Securities Exchange Commission. They don't care. Unless you're politically against them. When you're politically against them, they care all day long. All right. Now, from there, let's see, there's the BCE, announces base interest rate. European Bank has just published the main financing. Okay, that's cool. All right. Now, we will have a GDP popping out in about 15 minutes. And this is right on. Boy, it's masking, without a doubt, the masking what's going on. But you can see we are climbing. We are climbing. Interesting. Interesting. So from there, let's see, what were we looking at? Let's go over to here again, back to the copper. And so now we'll go over to the platinum. And that'll be it for the metals. Unless anybody out there wants to see something. And there is the, you can see here let me just change this. I can't tell. It looks wrong to me, but let's double check it. Let's see, what do I have it set on? I have it set on default. So let's see what 24/7 looks like. Okay, that matches up better. Because that's the good thing about the lines we put in. At least we know that's where it was accurate yesterday, and that's where it is today. It's still kind of drifting like the gold. Let's go take a look at gold one more time, and then we're going to go over to the energy sector. And there's the gold. Well, gold is just a little teeny pop up. Let's see what the silver does, since we're seeing gold do that. And silver is still pressing on the upside. All right, traders, from there we go over to the energy sector. So we're going to throw crude oil on right there. Crude is moving up. Glad I topped off the tank last night. Let's go like that, and we go like right there. Where is it at? There's Brent. Where's Brent? Brent is right there. There's Brent right there. Let's just show you what the light crude looks like. Lifting up the same way, just climbing, climbing, and climbing. It has to be moved over, I guess. Oh, that's February. I can get rid of that. That's not even trading anymore. It hasn't been traded since Monday. Right there. There we go. And so we've been in the buy there since last Thursday. So for 6 days now, it's been in a buy. It climbed through the weekly there, and just with it right together, and it just kept on climbing. Now over here, we jump over to Brent. See what Brent is up to. There's Brent there. Doing the same thing, climbing for the last 6 days. Let's put it up over here on our beta, because we can actually get Brent on a beta, so that's really nice. Let's see, BZF. There it is right there. And let's show you what we're looking at. You'll see our math in it. There it is. You see all those days in a buy. It's been climbing. Woo, woof, woof. It's been climbing. What's that? 1, 2, 3. 1, 2, 3. 9 days. It's been in a buy in the Brent. And the weekly has been in a weekly buy for 4 full weeks. And I bet it has that same look to it when we go to J4X. Let's take a look and see. The weekly, I would think it would be somewhat like it, at least 3 or 4. Let's see, 3. Okay, that's not too bad. So it's pushing up. They're buying a little bit more here. They're a little worried about it, maybe there. It's not exactly anything too earth-shattering. Energies, for all the craziness in the Red Sea and all that, doesn't seem to have that much of an effect. Obviously, they don't feel like any oil field is threatened. All right. So there we go. There's the Brent. And from there, we go over to, where do we go? We go to, we've done crude, we've done Brent. We'll go to natural gas. Let's see what the natural gas looks like. Right there, right there. Now let's see what month again, because that's this has been the interesting story of all, is the oh, there we go. Let's see what that is. So from there, and so let's see, and then from there. A good VP pick. Okay. There we are. Now let's go to natural gas. I'm looking for who's the front month of natural gas now. I've been using March just because of the open interest that dropped so dramatically. But we were saying that yesterday. We're not really sure how the Henry Hub works to begin with sometimes. About turning pipes on and turning pipes off, and because we saw that the back month is discounted, and then we see that the next month after that is a little premium in it. So I'm not sure what's going on. It has to be. That seems. I know one thing for sure. I can say this for sure. It's obviously showing supply and demand. It is definitely showing that, and obviously the supply is under right now. That's expiring, and the supply for next month is over. In other words, there's more than needed. That's why it's trading lower. That's the way it works. So let's go find. Let me find going to the exchange and seeing which one is the front month at the moment. I think we're getting close to being expired, I would think. Not gas, not gas, not gas. Nope, they're still trading the February, and it is trading. Was that? That's 30. So that's 50, about 54 cents higher. 54 cents higher. 54, like half a dollar higher. Whereas the back month is at 227. The front month is at 281, and then the back month behind the March contract at 227 is trading at 228. It's only like a penny and change above it. So, I mean, one's 50 some odd cents difference. The other one's 1 penny. So that, and then the April one, that's the April contract. So, I don't understand exactly how the hub works, the Henry Hyde hub, but it obviously there's points where they have to turn one pipe on and turn one pipe off. And when they do, I guess that's where that 50 some odd cents comes in. All right. From there, let's see. Let's put it up on the screen here, right there. And there's the nat gas. That's the March contract showing you at 227. Whereas you see it over here on J4X, you see it at 2. Oh, wait a minute. Now they're reflecting the same one I am now. Okay, so they've stopped following the hub. Okay, so the hub is done. Let's see. But I guess that's where it expired last night or something like that. Let me just open it up for a second. See if there's an update. They're saying there was volume yesterday. Yesterday must have been the last day. There was over 10,000 contracts traded. It's interesting how it runs right up to the door. Actually, they're showing us contracts trading today. That's the interesting thing is there's contracts that are trading right now. So I guess tomorrow, possibly. What's tomorrow? Friday, right? Maybe it ends at the end of this week. So we'll see. We'll understand the delivery a little bit more. All right. From there, we go to the... where is it we go? Oh, I know what we do. We go, and you can't see it there. So let's do this. That is the March contract. And you can see it right there. There's the 227. You see J4X at the 227. Same thing. So they're now both watching the March contract. March along. And it's jumping into the weekly, too, at the same time. And from there, we slide over to the Spanish company and see what they're up to. Espanol. And we go all the way down to right there. Trading at $25.24 at a low. It's playing with the low. There's the low today. Low. And then we go over to our beta. Beta. Right there. There's the beta. And let's put it on there. All right. There's where it is right there. And you can see it's been, in a weekly sell. And you can see it's been in that daily sell for woof. From up in here, it went into a daily sell and then finally jumped into a buy for a day or two. And then woof, right back into the daily sell right there. Whoop. Ooh, let's straighten that out. Right there again. So it went into the sell again, right? I didn't mean to do that. There we are. We went into the sell right there. Let's see, what do we do? We got to go like that. Okay, so we can see that. So it goes into the sell there and then just dropped like a little rock. And that's nice. That means the prices are coming down in Europe on natural gas, which is hooray for us. I guess a month early of Easter always helps out. I like that. Have Easter a month early every year. And so, because I'm into Purim. Purim's cool. And so that's where we're at. That's the action of it. And then the noise is going to come. Let's go take a look at the stock market from there. Let's go over and look at Mr. and Mrs. Stock Market, because in a matter of a minute and less, the GDP will pop out. And we'll put this on. There's the S&P 500 right there. And let's put the intraday up right there. Let's see, let's tighten it up more so we can see where the lines are. So that's where the news made it out. Whoa, watch it. First ticks were up. Let's see if it climbs back up there, because it was climbing, so I would think it'll come back up there. and it's only like a buck, 2 points. There it goes. Let's see if it gets going there. And let's see some of our other intraday of it. There's the little bit longer term. They gave it a quick drop, and now it's trying to lift back up. Let's see. It's going nowhere as particular. And then let's go into the longer term of a 1600 tick. And it's just hanging right there. But, yeah, it's climbing back up to the highs. So we'll go back to this one right here. The 39 tick. That's taking it out now. And that's what that always tells us. It always tells us where the money wants to go. And we are right so many times about it. And so this is where the reporters knew about it. And it climbed up. And they nibbled. Then the first inclination was take my profit. And now where is it? Still climbing. Look at it climb. And that's what it was supposed to do. Go up, up, and away. GDP first read. Jobless claims. Deck durable goods. It was supposed to be up 2%, and it was 3.3. It was hot, 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 hot. And what is it saying? No interest rate cut. So I imagine the dollar index is jumping. It be jumping. It be jumping. Let's go check out the dollar index. It be jumping. Okay, so it's 3.3 versus a 2.0. And so the dollar index is, I guess it was lower. Now it's a little bit higher. I guess so. I mean, they took it up out of nowhere. We were looking at the 102.97, 103. Remember, I was saying it was sitting on top of it. So now it's at 103.03. And it popped really quick up to 103.20. We should take a look. We should, let's do this. Let me see. Let's put this in here. Let's go over to my intraday chart just for the fun of it. Got to have some fun, traders. Let's go over to it. Real fun. And look at them climb, climb, and climb. Didn't have to buy any puts. When I saw that action, I got call spreads on. So, go, mama, go. Treat daddy nice. All right. Let's see where we at here. Let's make a copy of this. And let's put the dollar index into it. It'll be kind of fun. And then I'm going to run away. Run away. Run away. Run away. Paste. And zinga-dinga. And zinga-dinga. And let's put that symbol in there. Like so. And we'll see the dollar index doing just as we're saying. D for dollar futures contract. D futures, futures, futures. There it is. Right there. There we are. Let's see what that does. I guess we should do settings. Woof. 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 How many days back is that? Not many trades. That's what the problem is. 3. Let's try that. Not much there either. Let's try one more time. Four. See if it straightens it out a little bit. All right, what we'll do is we'll see the price, but we won't see our mathematics. I don't mind. Whoa, there we go. We're starting to get something going on there now. So right there. So let's do this. We go like that. Oh, I know. This is not live. That's why. That's not live. So we'll just get rid of it. I forgot. That's ICE and not CME. Ooh, keep on climbing. All right, traders. We've had enough fun today. Yeah, I know. Hot, 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 hot. Hot, 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 hot. Hot, 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 hot. And you know what? They did it again as usual, Giannis. They front-runned it, and nobody cares. They release that news 15 minutes before the public gets it. And what do we see every time I show the traders here? The 15-minute, algorithm combined with the chart. It always tells you where the real money's going to go. Up, up, and away. And the first inclination they do always, they do the fade. They sell out their, try to take their, front running profits. That's all they do. They try to get out of the front running profits, and then, oh, what's that? Hey, let's see, had to take off from. Okay, not like that. You see, that's the major beat. Yep, it is. All right, traders, we're out of here. This is Doc from North America saying happy trails to you until we meet again, which will be the Friday. That's tomorrow. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart trading day. Catch you tomorrow. Arrivederci.